Hello everyone, welcome back to Jack Fund Management. A lot of rebalancing has gone on recently. The shape of this recovery should have a lot to do with the science, therapeutics. Many of these businesses hadn't prepared for an environment like this, did not allocate capital in the best manner, maybe raising debt to support a dividend, instead of do any sort of M&A activity. The restaurant industry estimates $25 billion in lost sales due to coronavirus. Congress expects a Phase 4 financial package. Visa announces transaction activity down. Disney has observed upward of 33 million impressions recently on social media for newer products. Amazon may start to recover, a big balance sheet. Cruise lines still could provide some unheard of upswing if they can stay above water. Gas prices had sunk majorly under $2 per gallon. Municipal bonds may have some serious problems. Tickets may drop down due to less people going out. Chicago PMI came out to 47.8. China's manufacturing data for the Manufacturing Purchasing Managers Index came out month 3 at 52.6, month 4 37. Infrastructure rebuilding may take place, a lane for self-driving vehicles could work. Coronavirus has impacted VC. Many smaller businesses, startups, leaning to take less favorable term sheets, giving more equity, agreements on rights. GS estimated approximate 15% unemployment number. A seventh facility created, repurchase agreement facility. Federal central banks can swap temporarily any treasuries they may have for cash. San Francisco Fed still states an evolution of this virus likely determines a shallowness or not of recession. Don't forget to like, subscribe, and hit that bell notification icon. Shelter in place can most rapidly predict a bolstered rate out of recession. And a wave of retail bankruptcies can probably come out of this. Oil had set on track for a worst month ever. Kinza sets up an amazing predictive tool, a super strong tracker showing a signal that shows hotspots. 1 million digital thermometers distributed worldwide, it maps out locations that could use focused testing. This gives a superior warning of community spread. It clearly shows a level of flattening by social distancing. Healthweather.us points to fever clusters lowering. US and Russia have agreed to maybe try to stabilize oil. OPEC may cut oil supply simply due to less demand. Oil demand has likely dropped at least 35%. The energy industry is likely gotten forever altered. Smaller producers can shrink further. We went to low 20s in 2016 and no rebalancing happened. 15% of all oil demand comes from people flying or people commuting to work. $1.5 billion to get given to each state at least. Illinois gets about $5 billion with about $8 billion plus costs. New Jersey warns bondholders. The California budget surplus could disappear. Only 154,000 passengers went through TSA on 3/31/2020. 2 million went through TSA on the same day in 2019. The video game industry projected $179 billion in revenue for this year, 2020. Microsoft Xbox and Wedbush states Zynga's whole portfolio amazes. In the third month of this year, average daily moves came out to about 5%. One certainty remained: volatility. Banks could still get into trouble with all mortgages, and QQQ and IGV still outdo value names. Fed has rolled out these programs faster by an order of months since the financial crisis. Sports media companies get hit with furloughs, merchandising, gear, all having problems. Most do temperature checks on employees. People would do well to think, where will we land 12, 15 months from now, as markets look forward. Private payrolls dropped by 27,000 in month 3 from Moody Analytics. People could think, what number of laid off employees will come back? What number may get replaced by AI, automation, cloud? One should think, when we get back to production, what does that look like? What will consumer confidence look like? What do other executives do, feel, hear? Still, as COVID remains 3 times as infectious as the flu, states should really enact a statewide stay-at-home order. Florida, Texas. About 25% of people show asymptomatic. Match Group reports a 50% uptick in conversations. And they may add a video component. $8 billion has flown into ETFs in month 4 alone. You really have to get corporate guidance, and smaller financials look like no-goes. Apple keeps pushing into services. Amazon has seen a plus 17 increase rush in the first week, third month, 26% the second week, 36% the third. Amazon Prime delivery may not come in a 2-day window. Vitals may come first. Healthcare costs could range from $34 billion to $240 billion. Premiums could go up, and businesses may begin eliminating 401k matching. Facebook announces they have made investments to remove CV misinformation, disseminating CDC-requested rigorous hand-washing videos. Google data reports an uptick in park visits. Tesla delivered 88,400 vehicles, which got quite ahead of estimates. Tesla operates very smoothly. Buyers love this Model Y production crossover. Tesla, similar to Apple, has made itself a premium brand with a premium product. And in this strain, lowering gas price may not affect Tesla. As we mentioned, most likely many people do not buy Teslas just to save on gas. These vehicles, as durable goods, still may preserve demand. Policymakers have to come back and make a 4th relief package. What they did cannot cover everything adequately. Shelter in place can most rapidly predict bolstering rate out of recession. Implementation problems may arise. Passing a bill rapidly, yet not getting relief money into the hands of those responsible that could use it, proves a bit pointless. 88,000 employees work for United Airlines. If payroll grants go to businesses, it can bear out far more superiorly. We await a lessening growth rate, vaccines, solid positivity, and news. Thanks as always for stopping by. Hit the like button, the subscribe button, and notification bell icon.